tend to have the wrong posture, you start to slouch. Imagine doing it daily. Then there's where the degenerative process takes place that causes weakness of your muscles. Sometimes a very simple twist and turn can actually cause you injury because the muscles wasn't strong enough to hold your skeletal posture. This can cause you to have back pain. By activating the right core muscles, you will actually help to reduce a lot of pressure going down to your back, because the more you don't move, it's going to cause more harm.
Assalamualaikum warahmatullahi wabarakatuh. First and foremost, I like to emphasize our objective on this presentation. We are aiming to conduct communication skill concerning financial accounting and reporting. Next, we like to narrow down the type of the business organization. We also want to figure out the definition and how it's classified for each of the business item. Last but not least, we like to portray the completed accounting process throughout the business. After several discussions, we anonymously agreed to choose DBC Physiotherapy Malaysia as our selected business organization on this project. Who are they? If you're wondering, in 1993, a group of Finnish experts set out to develop new, more effective methods of physiotherapy and rehabilitation. As a result, firm named DBC has been created, Documentation-Based Care. The core of the DBC concept is a treatment concept based on a foundation of strong scientific evidence and clinical reasoning. Today, DBC is a global success story that has improved the life of thousands of people, from office workers to the professional athletes. As you may be aware, there are three primary types of business organization known as sole proprietorship, partnership, and limited company. As for this, DBC has been categorized as a partnership business, whereas a business owned by more than one person. To be precise, this organization is owned by 36 partners and has been subject to the Business Registration Act 1956 and 1957. The BQ headquarter location are quite strategic because it is located in the heart of the city Kuala Lumpur. It's close to the various public transportation and have a large parking area. They are resided in the building called Amp Walk at the Jalan Ampang. So customers should not having difficulty to obtain services at this place. To make it more lively, they have lot of branches scattered around Malaysia. Begin with the headquarter at Ampang, TTDI, Shah Alam, Bangi, Melaka, Ipoh, Alostar, and the last one at the Kuching, Sarawak. This organization was founded by Mr. Wee Hock Kee in the year of 2000. At the moment, the beloved son of his, Mr. Nicholas, has been entrusted with leading the organization towards excellence and peerless. Their partner capital contribution for each branch close to the 1 million ringgit. Quite a high amount, right? Actually, they use an advanced, high-quality technological tools imported from overseas. Based on the interview that we have been conducted, they are motivated to ensure that all clients receive the greatest possible therapy, which is comparable to that provided in the industrialized country. And as it turns out, we can see on the screen there are a wide range of positive comments and feedback from their customer across the nation. DBC is an outpatient physiotherapy treatment provider using evidence-based protocol and Finnish active reconditioning technology. In a simple word, they assist leading treatment provider and payer in delivering excellence in physiotherapy and musculoskeletal rehabilitation by providing effective, efficient, and economical solutions. They conduct and monitor exercise elements such as endurance, core stability, coordination, and balance control in order to achieve the ultimate goal of freedom from pain and improve body function. Other than that, the main activity is providing occupational health program on a range of aspects, including talk and screening on spine, ergonomic, posture awareness, back pain prevention, musculoskeletal disorder, and etc. They organize talk and screening to raise awareness of health risks in the workplace and giving advice on the respective preventive measure. For my last point, we may visit their premise every day of the week except on Sunday as their day off. Now, let's move on to the next segment of our presentation. Thank you.
Thank you, Izrul, for the introduction. So now, let me brief about business characteristic for DBC Physiotherapy Malaysia. Before we go through each characteristic detail, allow me to explain the definition of partnership business as DBC Malaysia is categorized under partnership business. Partnership is an association of two or more persons who agree to carry on a lawful business in a common with object of sharing in partnership, which all I can say, the partners provide the capital and share the responsibility for running the business on an agreed basis. You might be questioned, what are the needs of partnership? Actually, the idea arose from the limitations of sole proprietorship. In other words, partnership came into existence because of the limitations of sole proprietorship. In sole proprietorship, financial resources and managerial skills were limited. One person could provide only the limited amount of capital and could not start the business on a large scale. We now move to point number 1. First characteristic that we can see here is their mutual contribution. There cannot be a partnership without contribution to a common fund. In DBC Malaysia, every partner is contributing their money, property, and also their personal intellectual to enter into a valid contract of partnership agreement. Next, the liability of each partner for DBC Malaysia is unlimited. The creditors have the right to recover the firm's debt from all partners where the assets are not adequate, whilst their division of profits and losses is equally shared among all partners based on their agreement. We continue with fourth characteristic of DBC business. As we learn, accounting for partnerships is much like accounting for sole proprietorships. The difference lies in the number of partners' equity accounts. In DBC Malaysia, each partner of total 36 partners have a capital account and a withdrawal account that serve similar functions as the related accounts for sole proprietorships. No partner can sell or transfer his share to anybody else so as to make him partner in the business. This can, however, be done with the consent of all partners in DBC board. Also, the partnership may be dissolved on the death, lunacy, or insolvency of any one of the partners. Why DBC Malaysia is registered under partnership business? The main concern for them is for brings greater financial capability to the business. Next, we will find out about DBC business classification by our beloved teammates Fatin.
Okay, let's go to the next topic is classification of business items, which is asset, liabilities, expenses, capital, and revenues. First of all is asset. As you guys know, asset is properties owned by a business which bring to future economics. Assets are one of the most important items in balance sheet. DBC Physiotherapy Malaysia are using company asset to help grow revenues. When we take out a loan, there are a broad range of uses for asset in accounting. However, there are many different types of asset and many people are not aware of the distinction between them. Here are a little more information about the different types of asset in this company. Okay. Current asset. Okay, for example is cash and cash equivalent, accounts receivable and inventory. Fixed asset such as office equipment, machine active treatments. The second is liability, the financial obligations of a business to its creditors. Liability is what you owe to another party. In short terms, asset put money in your pocket and liabilities withdraw your money. So this company does it in the short term a company with suppliers. Okay, for example, the company will produce a new massage machine to make it easier for customers to do physiotherapy. So, the company will be in debt for a short period to settle all existing debts. Okay, next is expenses. And expenses is simply a cost for a business. Expenses are subtracted from revenues to determine profit on the income statement. Okay, and expenses is the cost of operations that a company incurs to generate revenue. Common expenses include payments to suppliers, employee wages, factory leases, and equipment depreciation. In monthly expenses, the company has incurred monthly expenses such as staff salaries, related bills, and some related rents. Next is capital. In business prospect, capital known as an asset or equity that useful for business development. Capital may either be cash, machinery, receivable accounts, and property. The capital of a business is the money it has available to pay for its day-to-day operations and to fund its future growth. The four major types of capital include working capital, debt, equity, and trading capital. Trading capital is used by brokerage and other financial. Lastly is revenue, money that generates from business operation. Total values of all goods and service by staff DBC Physiotherapy Malaysia sold by a company in a period. According to the revenue recognition principle in accounting, revenue is recorded when the benefits and risks of DBC Physiotherapy have transferred from customers or when the delivery of service has been complete. Notice that this definition doesn't include anything about payment for service actually being received. This is because the company provides physiotherapy by stage to clients, meaning they will not receive payment until it is complete.
Thank you, Ms. Fatin. Assalamualaikum and a very good day to Madam Rohayu and fellow classmates. As you can see here, there are a few steps in the recording process of DBC's business. The first step in the accounting cycle is identifying business transactions. DBC will have many transactions throughout the accounting cycle as they provide different types of physio services and packages. Each one needs to be properly recorded on the company's books. But DBC show one step ahead as they use computer software as cashier and accept all type of payments such as cash, debit, credit card. Record keeping is essential for recording all types of transactions. DBC will use point of sale technology linked with the computer softwares to record sales transactions. Beyond sales, there are also expenses that can come in many varieties. There are two ways to classify business transactions in accounting: cash and credit transaction or internal and external transactions. Second is source of documents. Every time a business is involved in a financial transactions, a paper trail is generated. This paper trail is referred to in accounting as source documents. Whether checks are written to be paid, sales are made to generate receipts, billing invoices are sent by suppliers, or work hours are recorded on an employee's timesheet, or the respective documents are source documents. Source documents are first and foremost important to the bookkeeping and accounting process because they serve as physical evidence that a financial transaction actually occurred. Nowadays, these documents do not necessarily need to be a physical hard copy. They may be in traceable electronic form. In addition, source documents are also essential in the auditing process. When DBC undergo an audit, the auditors access to a clear and accessible paper trail of all transactions enhance the overall legitimacy and independence of the audit. In order to reaffirm the accuracy of the company's balances in individual accounts, auditors need full access to all the documents. Overall, to run a business more smoothly and enhance transparency, all its source documents should be kept and stored for future reference. After the initial recording, all documents will be preserved and organized into a file and put into a system so they can be retrieved at any time. DBC also make a record of general internal control procedure specifying who in the firm can access and authorize payments, order, and other transactions. Third, a journal is a book, paper, or electronic wherein transactions are recorded. Journals are also known as books of original entry. Business transactions are usually recorded using the double entry bookkeeping system. They are recorded in journal entries under at least 2 accounts. Transactions are recorded chronologically as they occur. To simplify the recording process, special journals are often used for transactions that recur frequently, such as sales, purchases, cash receipts, and cash disbursement. And a general journal is used to record all those that do not fit in the special journals. DBC does appoint an accountant to manage the transactions of business. Fourth, ledgers. Also known as Book of Final Entry, the ledger is a collection of accounts and shows the changes made to each account from past transactions recorded. It also shows the current balances. Simply put, the ledger collects all records made to a specific accounts. For example, all journal entry records made to cash are posted into the cash account in the ledger. After posting is complete, we will be able to see all increases and decreases in cash, and from that we can determine the remaining balance. Fifth, a trial balance is prepared to test the equality of the debits and credits. All accounts balances are extracted from the ledger and arranged in one report. Afterwards, all debit balances are added. All credit balances are also added. Total debits should be equal to total credits. When errors are discovered, correcting entries are made to rectify them or reverse the effect. However, the purpose of a trial balance is only test the equality of total debits and total credits. It does not provide complete assurance that the accounting records are correct and accurate. Some errors could exist even if debits are equal to credits, such as double posting or failure to record a transactions. 6. Adjustments come in two, which are adjusting entries and adjusting trial balance. Adjusting entries are prepared as applications of the accrual concept of accounting. At the end of the accounting period, some expenses may have been incurred but not yet recorded in the journals. Some income may have been earned but not entered in the books. Adjusting entries are prepared to update the accounts before they are summarized in the financial statements. Adjusting entries are made for accrual of income, accrual of expenses, deferral, prepayments, depreciations, and allowances. An adjusted trial balance may be prepared after adjusting entries are made and before the financial statements are prepared. This is to test if the debits are equal to credits after adjusting entries are made. Last but not least, financial statements. When the accounts are already up to date and equality between the debits and credits have been tested, the financial statements can now be prepared. The financial statements are the end products of an accounting system. A complete set financial statements is made of 1. Statement of comprehensive income, 2. Statement of changes in equity, 3. Statement of financial positions or balance sheet, 4. Statement of cash flows, and 5. Notes to financial statements. Thank you.
Back again with me. Thank you so much to Miss Atiqah for a clear explanation on the recording process of DBC Malaysia. Now we focus on the strengths and weaknesses of the recording process. DBC Malaysia has a clear picture of cash flow. It is proven with the increment of their company's liquid assets, which enabling it to cover obligation, reinvest in its business, return money to shareholders, pay expenses, and provide a buffer against future financial challenges. If a company's cash generation is positive, it's a strong indicator that the company is in a good position to avoid excessive borrowing, expand its business, pay dividends, and wither hard times. Second strength that we can conclude from the recording process explained just now is their consistency of recordation and presentation, as DBC Malaysia is using their own computer software linked with point-of-sale technology to record all types of transactions. This makes easy for bankers, managers, creditors, and other stakeholders to compare the performance over the business over different financial years. From time to time, DBC Malaysia has come out with so many ideas with their creative problem solving to standardize their recording process of the business. This we can see from how their business process is redesigned until they sustain the business over 20 years. Based on our study of the recording process of DBC Malaysia, we also found out that they have few weaknesses. First, it is common for a company to have errors in their data entry and have incorrect calculation. From the interview session, they acknowledge that one of the most common data entry problems occur during the actual data input process. Actually, a common occurrence of data entry errors does not only bring inconvenience but also creates unnecessary expenses. Other than that, sometimes DBC Malaysia will having some difficulties to trace customers' payment via digital wallet or e-wallet. So by the end of the day, they will have a problem to record the sale because the opening and closing account does not tally with the number of customers came. Moreover, difficulty inventorying and tracking files due to system maintenance are one of the weaknesses that they took seriously. As we have been informed that DBC Malaysia is now 80% going for paperless, and it is one of the best ways to improve business efficiency, cut costs and maintain customer service. So by the time they are improving the efficiency for a better service.
In conclusion, DBC Physiotherapy Malaysia is a partnership that is what allows the smooth functioning of a firm run by a partnership business. It is a legal and authorized document, hence it protects the partners and their rights. It helps solve disputes that may take place in the future by providing maximum satisfaction to all the parties.